REITs or real estate investment trusts are like mutual funds. They allow you to invest as little as 50,000 rupees to own a tiny part of the best quality office and commercial real estate in India. In the last 2 years, the country has seen public listing of 3 REITs, Embassy Office Park REIT, the largest, followed by Mindspace REIT and the most recent Brookfield REIT. Sameer Kaul, MD Trust Plutus Wealth Manager, and Gagan Randev, Executive Director, India Sotheby's International Realty, join me to decode why REITs make sense in one's investment portfolio. Sameer, I just had a long conversation with Mindspace and, of course, Anshul of Cushman and Wakefield, and they continue to believe that India office story remains very robust. And we have 3 listed REITs from probably the best guys in office space. But somehow, the REITs are not doing well. I mean, they're barely ahead of their listing price. What are the investor concerns? And are they short-term or really longer-term?
Yeah, I think, Manisha, first of all, I think REITs and InvITs are a new asset class for Indian investors. And like you rightly said, they've been recently listed. I think when you had the pandemic in March of 2020, I think there was a general fear around the lockdown and the implications in terms of office occupation and leasing. And of course, there is a worry that, will vacant spaces be leased? Will there be new leases? Will you be able to release at a premium? So I think the price dip reflects investor worry around the future of the workplace. However, I continue to believe that that's overdone in terms of pessimism. I think, like you rightly said, the REIT and the quality of the assets which are there in the REITs offer a very attractive proposition for Indian investors. The REITs are also tax advantage, which makes it even more compelling, especially in an environment where fixed income yields have fallen down. We think that the REITs are a very, very attractive proposition, and one should not worry about the short-term price correction. One should think long-term, because the future in the long term is very much people getting back to work in the office.
Gagan, you believe that? You share that sentiment that people will come back to work, and this entire conversation around work from home, work from anywhere, maybe not everyone will return to work and therefore demand will be impacted of office spaces is overblown?
See, I think currently, and I think for the last year, there has been a little bit of worry about the number of people who are going to come back to work, how office offtake is going to take. But the fact of the matter is that if you look at the biggest employers across, most of them have continued to occupy the space they were. So the number of, I would say, cancellations of leases has been very, very few. Yes, fresh offtake has been much slower, but your existing tenants are very much there. So we also know that, things were coming back to normal till about March, and there was a big expectation that in the quarter starting April, a lot of people would have been back to work, especially in the ITS companies. But I think the second wave has pushed that back. I at least have no doubt that as the pace of vaccinations increases and if we continue ramping up from June, July onwards, as the number of fresh cases keeps coming down, there is no reason why you're not going to have work to, people back to offices probably from as far as the last quarter of this year. So I don't see that to be a challenge. In fact, if you look at some of the biggest investors like Goldman Sachs, Blackstone, they've all said that work from home cannot be a permanent phenomenon. It is going to be where people come back, and especially when you look at the youngsters, etc., they would prefer to be in a working environment. So I absolutely have no doubt that sooner or later, people are going to be back in the offices as this crisis abates.
Okay. Then, Sameer, then let me come back to you. You're saying that probably the bleed in REITs, listed REITs is overdone. What percentage of REITs would you recommend that an investor should have in his or her portfolio? And what sort of yields should they be prepared for?
I think at this point in time, we are comfortable looking at a 5 to 8% kind of allocation of investor portfolio into REITs and as well as InvITs. I think at the current price and given the current cash flows, I think that a return between 6 and 7% is very plausible. I think I said a bit earlier, Manisha, and I think it's important you share this with your viewers and investors because, the big advantage of the REIT is that when clients are looking for fixed income, they also want tax efficiency. And the REIT structure has that inbuilt tax efficiency, because now both Embassy, which is paying out 78% of its cash flow through dividend, and Mindspace, which is paying out 92% of its cash flow through dividend, these are tax exempt in the hands of the investor. So the post-tax return for investors, assuming that the dividend stream continues, is very, very good.
Better than debt funds? Sameer, better than debt funds right now?
Today, if you look at the fixed income landscape, if you take no risk and buy tax-free bonds, you get 4.4%. If you go into a mutual fund with a high quality underlying, you probably get to like 5 and 5.25. So I think if you're getting 6% thereabouts, and directionally, it's also a very positive asset class given inflation, keeping inflation in mind, because there's a rent escalation which keeps building in every 3 years. Is that effectively if I get between 6 and 7 post-tax with high quality MNCs as tenants and counterparty, I think that's a very, very compelling proposition.
Okay. Gagan, would you be agnostic between the 3 listed REITs, or are there ways that people can choose which one should they go with?
So I think if you look at the 3 REITs which are there today, obviously in terms of size, the Embassy Office Parks REIT is the biggest, followed by Mindspace and then the Brookfield REIT. Now, honestly, all of them are diversified. And while I wouldn't like to pick one of the over the other, I think the hottest markets for commercial in this country today is Bangalore. Bangalore has been consistently doing about 40-50% of the leasing of the top 7 cities. And if you look at Embassy Office Parks portfolio, while one would say that, it's a high concentration of risk, 70% of the portfolio is Bangalore. And that continues to be one of the best markets and possibly the market with the least disruption. So all things aside, and the fact that there is a 29% mark-to-market potential in the rentals in the Embassy Office Parks portfolio, if I was putting in my own money, I would probably pick that over the others, though I will say the others are also well diversified and offer great opportunities for investors.
Sameer?
Between the 3, our active coverage, Manisha, is between Embassy and Mindspace. I think like Gagan mentioned, I think Bangalore is a great market because of the ecosystem. So I think Embassy with 72% concentration in Bangalore is compelling. And by the way, even Mindspace, which doesn't have any Bangalore concentration but gives diversification across Hyderabad, Chennai, Pune and Mumbai, and has a high quality sponsor in the K. Raheja Group, I think that's also very, very compelling from our perspective.
Okay, right. All right, gentlemen, we've completely run out of time, but Sameer and Gagan, thank you so much for joining me on the Property Show. Please stay safe, and to all our viewers, stay safe, stay home, and hope that the vaccinations come in and all of us can step out to work again if we so desire. Otherwise, work from anywhere. Goodbye and thanks so much for watching.